Hi everybody, my name is Suyin and welcome to my channel. If you are new to this channel, welcome, and we are going to be discussing all things money and investing, and you're in luck because today, if you are interested in the stock market, we are going to be discussing a whole new topic, which is going to be about the financial statement. So there are three financial statements, and the first one that we're going to be looking at today is the profit and loss statement, also known as, let me just read it from this trusty annual report that I have on my bed. It's also called the profit and total comprehensive income for the year. Very fascinating. Okay, so basically this is the hardest part when it comes to an annual report for most people, myself including, because this is the most numbers heavy section when it comes to analyzing a company and trying to understand what is going on and trying to understand if this company is worth the money we are paying for at this price. So when I say at this price, I mean current share price. So here we are going to look at the profit and loss statement and hopefully uncover some new discoveries and make it simple and less overwhelming to understand. So let's jump straight in. Okay, so the first thing is I'm going to oversimplify this a little bit so that we can actually get through this video in one piece. We are going to be looking at a couple of numbers, and the first one is revenue. So revenue is the first thing that we should be looking at in our profit and loss statement, because again, revenue is price times quantity of all goods and services sold within this company that we are looking at. And if you haven't seen it, I will link it in the cards up above on that video that I made on how to read an annual report. So that is basic step number one, and this is digging straight into the financial statements, of which there are three, and this is the first one. So revenue is a good number to look at because it is telling us what are the sales of the company and how it has done. So hopefully this revenue number is increasing over the last 5 years and last 10 years even. And this will kind of show us whether this company is sustainable or whether it's kind of like plateauing in terms of its market size and market share. So the next number that we're looking at is gross profit. We've talked a lot about net profit, but we have not really mentioned gross profit. So what it is another term of looking at it is called earnings before interest and taxation. So what it is exactly that, the earnings of the company before we have taken into account money that should be taxed away according to corporate taxation brackets, and also the interest that the company needs to pay off in terms of its loans. So that is gross profit or earnings before interest taxation. I hope I'm getting this right. So that is the next number, and after that we're gonna be looking at net profit. So net profit again is profit after tax, after we have accounted for taxation and also after we have accounted for depreciation and amortization. So these terms are very accounting specific, and the idea is this, where when we have a company, the company tends to have assets, and assets can range from many different things depending on the nature of the industry. So say if you are in a property company, your assets could be land, it could be buildings, it could be apartments. And yeah, this is where it tends to get a bit technical and kind of confusing to me, where your assets, do they take into account your inventory, things like that? We will discuss this in the next video, and hopefully I can gain more clarity by then, where we are looking at the balance sheet of a financial statement. So we'll save that for the next video and we'll keep pressing on. So the topic that we're talking about now is depreciation. So depreciation meaning, say that company that I was talking about, it's a property development company and it has land. And okay, let's not use the example of land, but let's use the example of a factory. And this factory will depreciate over time due to wear and tear, your piping needs work, flooring needs work, things like that. So due to the existence of wear and tear over time, accountants will depreciate the value of this particular factory and account for it in the accounting books. However, as a business, we know that sometimes the value of the factory can actually be sold for a higher price in the future, and that is due to the nature of capital appreciation. So sometimes this asset is depreciated, but there is still value in that particular asset, and as the depreciation gets more and more over time, it seems as though the asset is worth very little, but in actual fact, for certain assets, the value still retains, and the resale of it is actually quite good or quite significant. So there are a lot of caveats, there are a lot of exceptions to this rule, so it's something to explore and to get comfortable with. Another word that we should be familiar with, or we should aim to get familiar with, is amortization. So where depreciation is to a fixed asset or a tangible asset, amortization is to an intangible asset. So intangible assets can depreciate over time according to accountants, and I'm not going to jump into it today because one, I'll probably butcher it, and two, I'll probably get a lot of things wrong, but you know, that's okay. We're all on this journey together. I've made so many mistakes in my past videos about inaccuracies, so when you watch my videos, be sure to read the comment section as well, and please comment down below if there are any inaccuracies. I'm only human, so sorry about that. But yeah, I'll do my best to fix my mistakes and learn from them and move ahead and move forward. Yeah. Okay, so after that, we're going to be looking at dividends. So they will tell you how much dividends have been issued out by the company in the profit and loss statement as well. And this is important because as value investors of my particular strategy, we are only looking at companies that issue us dividends. And there is a whole debate about this, because if a company is issuing dividends, that means that is capital that they could have used to reinvest in their business on one hand. But on the other hand, it is also good to be receiving dividends because it's lowering down the risk of us shareholders, because we've invested our money, and if the company is issuing dividends, we are actually collecting back parts of what we have invested, and that means our capital at risk, our money that we've actually used to invest into the company, we are getting some of it back, so that takes away some of our risk as well. And it's a very nice reward to receive dividends in the mail and in our bank account, so that's something I really like. And yeah, so there's this whole debate on this, and in particular for US stocks, a lot of companies like Tesla, they don't issue dividends because they need as much money as they can to pump back into the business, so there is a trade-off with that. But for me in particular, I love dividend paying stocks, and I would not touch a company that does not pay dividends. Yeah, that is my personal policy. Yes. Okay. Other than that, there is also this thing called earnings per share, and this can be found in the profit and loss statement. This is important because earnings, as we mentioned before, it's talking about net profit, and for net profit divided by the total number of shares available in the company, that is giving us an idea of what our per share value is actually generating us back in profit. So for example, the company can cost us 1 ringgit and 50 cents per share, but their earnings per share could be something along the lines of 20 cents per share. So we would know, for a matter of fact, we are actually paying a premium for what the company is earning. So this is something that is interesting, because we will always see that we're paying a higher value for the shares, because when we buy a share, we buy it once generally, right? And you are paying a certain price for it, but what you are actually enjoying is the value that the shares will give you over a long time, especially if you hold on to the shares and you remain being a shareholder for the company. You are entitled to their dividends and their earnings for the rest of your life if you never sell the shares and if the company is in operation for the rest of your life, if that makes sense. So it will make sense that we have paid more for what the shares are actually worth in earnings for that particular year. Makes sense. That's why it's called an investment, right? You're paying a certain money now, knowing or being fairly certain that you will be earning a lot more money in the future. That's an investment. It will put money into your pocket in the future. Hopefully not too far into the future. So yes, so that is why we're looking at earnings per share, and hopefully it is growing and has grown over the last 5 and 10 years. And yes, that is actually the numbers that I would highly recommend to look at when we are looking at the profit and loss statement. So let me reiterate: revenue, gross profit, net profit, dividends, and earnings per share. So these are super important. There are going to be other details and other numbers within the profit and loss statement, and that is up to us to discover, because remember, these videos that I'm making are only a springboard. They are serving to get us one step in to the world of stock market investing, and the rest is really up to us to do the homework and to find out more, because we are living in a digital age where there are so many resources available. So yeah, do a quick Google search and find yourself caught in the rabbit hole of information. So do enjoy that process. I hope you have enjoyed this video and I hope it has been helpful. So please remember to subscribe if you haven't already, and give me a thumbs up and comment down below. I would love to hear from you. So see you in the next one. Bye!